The craziest thing about nut farming is this. You can spend years losing money before the business becomes valuable, but once it works, it can keep producing for decades. That is the strange math behind one of the slowest, most patient investments in agriculture. It doesn't reward speed. It rewards timing, land, and the ability to survive the early years. Today, we're following the long-term economics of a nut orchard to see how a 10-year wait can turn into decades of cash flow. In 2026, the global almond, walnut, and pistachio market exceeds $50 billion, with demand from Asia, the Middle East, and the plant-based food industry climbing steadily. We'll break down the upfront capital cost of planting an orchard, the brutal loss years before first harvest, the peak production economics that make nut farming exceptionally profitable, the water and weather risks that wipe out unprepared investors, and the generational wealth play that makes this one of agriculture's most misunderstood asset classes. The upfront capital. Planting an orchard is real estate development. A nut orchard is not a farm. It's a real estate development project with a 10-year build-out. Land cost. Productive nut-growing land in California's Central Valley, the dominant U.S. production region, runs $15,000 to $30,000 per acre. Marginal land costs $8,000 to $12,000. We'll use $20,000 per acre for a viable almond orchard. Development cost. Land clearing and leveling, $2,500 per acre. Irrigation system installation, $3,500 per acre. Trees from nursery, 140 trees per acre at $9 each, $1,260 per acre. Planting labor, $500 per acre. Soil amendments and first-year inputs, $800 per acre. Well, pump and filtration, $2,000 per acre, amortized. Total development cost, approximately $10,560 per acre. Add land, $30,560 fully built. A 100-acre orchard requires roughly $3.05 million in upfront capital before a single nut is harvested. The loss years. Years 1 through 7 are pure burn. Annual operating costs, fertilizer, and soil inputs, $600 per acre. Water, normal year, $500 to $1,200 per acre depending on district. Pest and disease control, $350 per acre. Pruning and labor, $450 per acre. Equipment fuel management, $400 per acre. Pollination, beehives at $200 per hive, 2 hives per acre, $400 per acre. Total annual OPEX, approximately $2,700 per acre. Years 1 to 3, 0 yield. Trees are growing wood, not nuts. Annual burn, $2,700 per acre. Cumulative burn over 3 years, $8,100 per acre. Years 4 to 6, first light yields. Year 4 produces maybe 500 pounds per acre. Year 6 reaches 1,500 pounds per acre. At $2.50 per pound, year 6 revenue equals $3,750 per acre. OPEX remains $2,700 plus $400 harvest cost. Net profit, $650 per acre. The orchard turns slightly cash positive in year 6, but cumulative losses from years 1 to 5 still exceed $10,000 per acre. Years 7 to 9, ramp-up phase. Yield ramps to 2,500 to 3,000 pounds per acre. Real profits begin, but you're still recovering early year losses. The honest timeline, a 100-acre almond orchard doesn't recover its initial investment until year 9 or 10. That's $3 million sitting underwater for a decade. Most investors who buy without understanding this timeline panic in year 4 and sell at a loss. The peak production years, the cash flow engine, peak production math. Mature almond orchard yield, 2,800 to 3,500 pounds per acre annually, at $2.50 per pound. Long-term average, prices fluctuate. Revenue equals $7,000 to $8,750 per acre. Operating cost at maturity, approximately $3,500 per acre. Water, fertilizer, labor, harvest, bee rental. Net profit, $3,500 to $5,250 per acre. Annual profit math. A 100-acre mature orchard at $4,000 net profit per acre generates $400,000 annual profit. Over a 15-year peak production window, that's $6 million in cumulative cash flow, tripling the original $3 million investment in cash alone while still owning land that is likely appreciated from $20,000 to $30,000 plus per acre. The land appreciation bonus. California nut land has appreciated roughly 4 to 6% annually over 30 years with sharp spikes during commodity booms. A $3 million parcel in 2010 could be worth $7 to $9 million today. The nut crop is the dividend. The land is the equity, the water risk, the variable that can end the business. The single biggest threat to nut farming isn't price, it's water. Water math. A mature almond orchard consumes 3 to 4 acre-feet per acre annually. 1 acre-foot equals 326,000 gallons. A 100-acre orchard uses approximately 98 to 130 million gallons per year. In wet years, surface water from California reservoirs costs approximately $200 per acre-foot. In drought years, allocations get cut. Farmers pump groundwater at $800 to $1,500 per acre-foot, or buy spot market water at $2,000 plus per acre-foot. Drought math. In a severe drought year, that same 100-acre orchard's water cost jumps from approximately $80,000 to $600,000 plus. One line item can wipe out the entire year's profit and then some. The 2014 to 2016 California drought forced thousands of almond orchards to be abandoned. Farmers literally stopped watering mature trees because water cost more than the crop was worth. Once an almond tree dies, you lose 7 years of investment. There is no restart button. The strategic water hedge. Smartest nut farmers don't just buy land, they buy water rights. Land without secure water is a speculative bet on rainfall. Land with senior water rights is a bond. These assets trade at completely different valuations, and most retail investors don't understand the difference. The price cycle. Why nut farming has boom and bust years. Even if your trees produce and your water holds, you're exposed to commodity price cycles. Price history. Almonds hit $4.50 per pound in 2014 during the California drought, crashed to $1.50 per pound in 2019 during oversupply, rebounded to $3.50 in 2022, and sit near $2 in 2026. Cycle math. When prices spike, everyone plants more trees. Trees take 7 years to produce. By the time new supply arrives, the market is oversupplied and prices collapse. This is the classic agricultural commodity cycle, but with nut trees, it plays out over a decade instead of a season. Hedging strategy. Serious farmers forward sell through co-ops like Blue Diamond or Olam, locking in 50 to 70% of expected production at fixed prices a year in advance. They sacrifice upside potential to survive downturns. Farmers who don't hedge get wiped out in bad years. Those who do hedge survive multiple cycles and compound wealth over 30 years. Diversification play. Successful multi-generational nut farmers don't grow one crop. They plant almonds, pistachios, and walnuts across multiple microclimates. Pistachios bear in alternate years, smoothing cash flow. Walnuts are more drought tolerant. Almonds are the cash cow, but most water dependent. Diversification spreads both weather and price risk. The verdict, the generational wealth asset. So who actually wins in nut farming? The losers leveraged investors who buy land at market peaks, plant a single crop, depend on spot water, and cannot survive the year 1 to 7 cash burn. They're forced to sell in year 5 at a 40% loss to a patient buyer, who then enjoys the harvest they didn't wait for. The mid-tier family farmers who inherit paid-off land but lack scale for modern irrigation, B contracts, and processing facilities. They sell into wholesale channels at thin margins and slowly lose ground to corporate operators. The winners. The generational family office. Family-owned operations in business 30-plus years, owning land free and clear, reinvesting profits into adjacent parcels. They've survived multiple droughts and price cycles. They have water rights, processing capacity, and patience. They're the quiet millionaires of agriculture. The institutional pension fund, CalPERS, TIAA, and sovereign wealth funds have poured billions into permanent crop farmland over 15 years. They have capital for the 10-year ramp, patience to hold for 30 years, and scale to vertically integrate processing and marketing. The vertically integrated brand owner, Wonderful Pistachios, the Wonderful Company, controls approximately 80% of U.S. pistachio retail branding. They own orchards, processing plants, packaging, and the consumer brand, capturing the entire margin stack. A farmer selling bulk pistachios earns $2 per pound. Wonderful sells branded pistachios at $8 per pound retail. The brand premium in nuts rivals the brand premium in shoes. Nut farming is the strangest business in agriculture. You spend a decade bleeding money on trees that produce nothing. Then you spend 2 decades collecting cash from trees that produce everything. The investor who survives the first 10 years owns a perpetual dividend tied to global food demand. The investor who can't survive hands the asset to someone who can. Patience is the actual product. If this breakdown helped you see the numbers behind the orchard, let me know in the comments. And if you want the math behind other slow burn investments, hit subscribe. We've got a lot more to uncover.